Oil just hit the 99th percentile. And oil at this percentile has preceded demand destruction in 4 of 5 cycles. Something is breaking beneath the surface, and the data confirms it. Right now, oil is at $114.3, the 99th percentile for the past year. Historically, oil at this percentile has preceded demand destruction in 4 of 5 cycles. Snyder says the euro-dollar system is tightening and nobody sees it. The dollar analyst says the dollar will surge as global liquidity contracts, crushing everything else. In the next few minutes, I will show you who the data says is right and what it means for your money this month. The commodity analyst has been right for 97 straight days. Here is the full scoreboard. The commodity analyst is right and the data keeps proving it. Oil at $114.3, 97-day streak, score 1 for gammon. Credit will blow out. Yield curve agrees at 0.50%. 21-day streak, the volatility expert's volatility expansion call is paying off. VIX at 23.9 and trending their direction. 14-day streak. Snyder is right and the data keeps proving it. Yield curve at 0.50%. 7 days running, McElroy might be right, but the data has not confirmed the thesis yet. 96-day streak, Hartman might be right, but the data has not confirmed the thesis yet. 90-day streak, too early to call the dollar analyst right or wrong. The thesis is building but not confirmed. 6 days running, score today, 4 right, 3 early, 0 wrong. A streak this long means the trend has legs. But long streaks end eventually, and when they do, the reversal is sharp. Today's big question: everyone agrees on dollar, so who's wrong? Snyder says the euro-dollar system is tightening and nobody sees it. The dollar analyst says the dollar will surge as global liquidity contracts, crushing everything else. Everyone agrees. In markets, that is usually the setup for a reversal. The crowd is most confident right before the data breaks against them. Here's what the data says. The dollar index at 189th percentile. Gold at $4,680. 83rd percentile, up 0.5% today. Bitcoin at about $68,000. 11th percentile, down 0.9% today. Bottom line, the consensus is bearish, and the dollar index at the 89th percentile says they might be right. But crowded trades unwind fast. If the dollar index breaks below 99, the milkshake theory loses its legs. Right now, it is at 100. If gold and Bitcoin both rally while the dollar holds, the liquidity thesis is wrong. The dollar index at 100 is in the 89th percentile, reversal territory. If it drops below the 75th, the thesis weakens fast. Gold at $4,680 will track it daily on the scoreboard. None of the 7 are talking about this next signal, and they should be. SP 500 just dropped 9% to $6,612. A move this size demands attention. Historically, the S&P at this level has historically marked a regime inflection. None of the 7 are talking about this. Keep it on your radar. Phase 1 is the good times, but good times do not last forever. Here is how close we are to the edge. We are 64 basis points away from Phase 2, the phase where credit breaks and volatility spikes. There is no acceleration in credit stress yet, but we are watching the pace, not just the level. The trigger, investment grade spread crossing 150 basis points, currently at 86 basis points. Pace is flat or improving, no urgency right now. Phase 1 means risk on is working. Equities, commodities, and real estate all benefit from loose conditions. Enjoy it while it lasts. For context, the last time credit stress built like this, credit spreads blew out and high-yield bonds saw drawdowns of 15%. The credit and rates layer has copper-gold ratio, equity risk premium, flashing red. Gammon says, the Fed is breaking things and credit spreads will blow out. The data agrees with that assessment. Phase 1 holds with 64 basis points of buffer. Conditions favor risk but do not get complacent. Wall Street trades the index. We trade the ground. Here is what the ZIP level data is screaming about today. Orange, CA, people moving in can't afford to live here. 110,160 households moved into Orange, CA. Their average income, about $105,000. Median home, about $4,450,000. Unsustainable migration pattern, demand without purchasing power. Baldwin, AL, people moving in can't afford to live here. 10,965 households moved into Baldwin, AL. Their average income about $86,000. Median home about $4,375,000. Unsustainable migration pattern, demand without purchasing power. San Miguel, NM, payment burden is past the breaking point. 87,583 NM, median home, about $550,000 on about $29,000 household income. Price to income ratio, 19.1. When the math stops working, sellers find out before buyers do. These are not hand-picked metros. They are the loudest signals in the housing data right now, chosen by the numbers, not the narrative. Today's debate asked, everyone agrees on dollar. So who's wrong? Let me show you what happened the last time we were here. The dollar index at 100, the 89th percentile. Notable, but not extreme. In 2022, dollar index hit 114, crushing emerging market currencies and commodities. In 2020, dollar spiked during the March liquidity crisis, then reversed on Fed intervention. In 2015, dollar strength crushed commodity exporters and triggered EM currency crises. Different environments, different catalysts, but every time, the resolution came fast. The pattern is not the level, it is the speed of the move once it starts. Meanwhile, Bitcoin at about $68,000 is in the 11th percentile. The last time both the dollar index and Bitcoin were at these levels simultaneously, the resolution came within weeks. That is why the scoreboard matters. It tells you which speakers saw it coming and which ones missed it. If history rhymes, Snyder should be paying close attention because the clock is ticking on this pattern. Here's what the data says to do right now. Do not chase oil here. The 99th percentile is reversal territory, not an entry point. Avoid Denver at 36% payment burden. That is stretched territory. Watch SP 500. It dropped 9% and nobody is talking about it. 4 out of 7 speakers are right. The commodity analyst, Gammon, the volatility expert, and Snyder. When this many align, the trend usually has legs. Every signal is live at analyze.builderslens.com. 7 speakers, 65 signals, 1 question every morning. Who is right? Subscribe and I will see you tomorrow morning.